is Bruce Blythe with Blythe Publishing at CME Group in Chicago. It's the afternoon of Thursday, March 31st. The grain and livestock markets have been closed for a little bit now. Traders have been going in today expecting some excitement from USDA, and USDA certainly delivered reports on quarterly grain stocks and planting intentions for this spring. The stocks report was the primary catalyst. USDA said corn stocks as of March 1 were down 15% from a year ago and below trade expectations, which just further underscores these ongoing concerns over tight supplies. Soybean stocks were down 1%, but also below trade expectations. So that pushed prices here higher from the get-go. Corn opened the limit up 30 cents higher. It stayed there the entire session, closing at that 30-cent limit from the nearby May contract all the way to July 2012, which really illustrates the deepening supply concern of these markets. May futures ended at $6.93 per bushel. Soybeans were about 38 cents. Matthew Connolly, who's a broker in the corn options pit here, he describes grain supplies as razor thin, in his words. He says if we go from a wet, cool spring to a hot, dry summer, it's going to further stir things up in the grain markets, and if weather really gets unfavorable, we're going to be talking $10 corn, $20 soybeans. Jack Scoville with Price Futures Group in Chicago spoke at a session the day before the markets opened. He thinks we're really going to need very good weather, even with the additional corn acreage we saw today, to replenish supplies. The USDA pegged corn acreage this year at a little over 92 million acres, up about 4.5% from a year ago, and the second highest since the end of World War II. A little bit above trade expectations. However, soybeans expected to be down a little bit from last year. The economics just favor more corn right now, according to USDA. Farmers from Iowa to Ohio to Mississippi planting more corn at the expense of soybeans and other crops. That's the way it looks right now. As far as livestock, Rich Feltus, who's with RJ and O'Brien and Associates, he looks for livestock markets to advance further on prospects for tighter and higher feed supplies, prompting lower weights and more cautious expansion attitudes by livestock producers. Now, livestock markets today had a little bit more of a muted reaction to the reports. April cattle futures rose 1 cent to $1.21 per pound, touching a record a little under $1.22 a pound. Lean hogs were up about 0.2 cents, 93.75 cents a pound. But again, the outlook there, higher prices, tighter feed supplies, expensive corn, that has not gone away. Now, we close out the first quarter today, and another strong performance by ag commodities. You have corn up 10%, hogs up 17%, cattle up 13% from the end of last year, and a little more perspective. Corn futures here a year ago today ended at $3.45 a bushel, so we have almost doubled in the past 12 months, and the way it sounds, we more of that to come. Once again, I'm Bruce Blythe, Blythe Publishing at CME Group in Chicago.